After your company holds its annual shareholders meeting, you need to file a Form 8K with the SEC within 4 business days to disclose for each matter voted upon at the meeting the number of votes cast for, against, or withheld, as well as the number of abstentions or brokered non-votes today on Zippy Point. I'm Brock Romanek. I'm a big fan of yous. So after your annual meeting, you're tired. The results are in. The board meeting is finally over. You're ready for a vacation. But there's one more thing, one last thing that you need to do. You need to file a Form 8K with the SEC under Item 5.07. So what meetings to report? These voting results on Form 8K are required for any shareholders meeting, not just the ones where directors are elected. Here's a Corp Fin staff interpretation driving this point home. And here's an example of a Form 8K filed for a special meeting to approve a merger with the voting results included. When to disclose. Under Instruction 1, the 4 business day clock begins on the day on which the meeting ended. So if the meeting is held on a Tuesday, day 1 is Wednesday, and the Form 8K is due on a Monday. See this Corp Fin staff interpretation about that. Sometimes time is tight and you don't know your final voting results yet by the 4th business day, particularly if there's a proxy contest involved or some sort of contested matter. But it might be for any reason. Shareholders voting at the meeting for virtual meetings tend to hold things up a little bit more if they vote at the virtual meeting compared to an in-person meeting because the inspector is not on site. That's one example. Instruction 1 helps you out here and allows your Form 8K to include just preliminary voting results. You then amend the 8K with the final voting results when you have them, filing that amendment within 4 business days of knowing those final results. If you're filing preliminary results, occasionally companies will add a little disclosure in there to put it all in context, particularly if there's a unique circumstance that requires some explanation. And if you're filing an amendment, it's smart to include an explanatory note to explain how the final vote is now in, like this example. It's very common to announce preliminary results at the actual shareholder meeting right after the polls close. And it's definitely possible that the preliminary results that you include in an 8K, if you're filing the 8K with the preliminary results because you don't know the final results at the time you file the 8K, they might be different than the preliminary results that were announced at the actual meeting since they were all just preliminary and the final voting hasn't happened quite yet. Some companies decide to post their final results on their IR webpage too, right after they file their Form 8K under Item 507. For example, see this disclosure in Alphabet's proxy, what to disclose. So A and B under Item 507 cover the normal circumstances, the date of the meeting, whether it was an annual or a special shareholders meeting, the number of votes cast for and against or withheld if there's a plurality voting standard, as well as the number of abstentions and broker non-votes for matters voted upon at the meeting. Typically, there should be 0 broker non-votes for matters that are considered routine, such as audit or ratification, where brokers have the discretionary authority to vote in uninstructed shares. This example shows how a company used a footnote to indicate that there were no broker non-votes because the ratification, the audit or ratification, was considered routine. See my separate Vid-Guide about proxy disclosure of voting standards to learn when a matter on the agenda is considered routine. A link to that Vid-Guide is beneath this video. Disclosure of voting result percentages are not required, but some companies opt to provide them. Here's an example from Microsoft that voluntarily discloses them. Although percentages can be helpful to show the level of support for items on the ballot, they also can highlight the impact of abstentions and how they are being treated under the applicable voting standard. If you're disclosing voting result percentages, you calculate them based on the applicable standard under state law, the state in which you're incorporated, and your charter and bylaws. And the voting standard may vary between your director election and the other items on your agenda, on your ballot. See my separate Vid-Guide about that. One thing to note, be aware that third parties may calculate your voting percentages differently than how you disclose them. For example, ISS doesn't count abstentions in determining whether matters received a majority of votes cast to facilitate comparisons among voting results at different companies. The denominator used in each calculation depends on the voting standard for each proposal. Say on frequency. So under Exchange Act Rule 14A21B, companies are required no less frequently than once every 6 years to provide for a separate shareholder advisory vote at their annual meeting to determine whether the say-on-pay vote will occur every 1, 2, or 3 years. This is called say-on frequency. If a say-on frequency vote is on your ballot this year, you'll need to disclose the results in your Form 8K. But you also might want to remember to disclose the company's decision as to how often the company plans to conduct future say-on-pay votes as required under Item 507D. This decision may be included in the same Form 8K in which you report on your voting results. If the board has made up its mind already what its say-on frequency will be going forward, if the board doesn't know just yet, it must be included in an amendment to the Form 8K, not in a new 8K, an amendment to the Form 8K. There's a difference. And see this guidance from the SEC about that the amendment is filed no later than 150 calendar days after the end of the annual meeting, but no later than 60 calendar days prior to the deadline for submission of shareholder proposals for your next annual meeting under Rule 14A8. And the alternative, as noted in this Corp Fin staff interpretation, the company's decision about its say-on frequency may be disclosed in a Form 10Q instead under Part 2, Item 5, filed in time to meet the deadline for this disclosure. Failure to provide this disclosure on a timely basis can result in the loss of Form S3 eligibility. That's a big penalty. So it's important to report on the company's decision within the deadline that's imposed. The SEC rules are designed to allow boards sufficient time following the annual meeting to evaluate and determine the company's say-on frequency. However, in practice, some companies may determine that it's not necessary for their board to undertake an extended discussion or wait so long, take some formal action to approve this future frequency decision, particularly if the shareholder vote heavily supported the frequency recommended by the board. So as a result, many companies do include their going forward frequency disclosure in the Form 8K reporting the voting results rather than in an amended filing later on or in a 10Q later on. And this is a good idea because quite often companies forget to amend the 8K to include this disclosure because 150 days is a long time to wait. And people forget. Maybe the in-house lawyer responsible for filing the amendment has moved on to another job. Things just get busy in life. You know the drill. So here's an example of an 8K where the decision by the board about how often it will put say-on-pay on the ballot, the frequency was not given, so an amendment was required. See the final paragraph of this example indicating that the board will hold say-on-pay on an annual basis. That's the frequency after they consider what they should do. So to really drive home this point, when say-on-pay frequency was first introduced, many companies forgot to amend their 8Ks and the SEC gave folks a pass in that first year. That was a while ago and the SEC is not as kind today. Instruction 3 allows you to just disclose the board was elected in its entirety rather than disclose all the numerical details if the company didn't solicit votes, meaning that the company is a controlled company and eligible to use an information statement on Schedule 14C rather than a proxy statement on Schedule 14A. If there's a proxy contest involved and that contest is terminated due to a settlement, be aware of the reporting obligations under Item 507C and Instruction 4. And in terms of exhibits, there's typically no exhibits to this Item 507 Form 8K. And let me know what you think.